Welcome to the Daily Brief, where I'll go over the action in the market for Thursday, December 22nd, and then we'll see how things look for Friday, December 23rd. We had a pretty significant down day. It kind of goes in hand with what we're seeing in our charts where things are negative. We probably did it a little overboard as far as the short term is concerned. We're starting to become oversold. It doesn't necessarily mean we have to stop here, but we might see some bit of a slowdown. We have been seeing well below average volume as well, and that may drop off. We're coming into right up to the holiday now. Please be reminded that on Monday, the market will be closed in observance of Christmas, and we'll have light holiday trading after that. However, during the day, we saw a pretty significant rebound. And so we have to ask ourselves, is the rally, has it started? Can it go over into Friday's session? Or were we just bouncing up after going down pretty significantly and just wearing off a short-term oversold condition before we get set to go even lower? So let's go back and talk about what happened. Right at the open, the futures were negative well before any of the economic reports came out, and we just carried that negativity into the open, where we had a gap lower below S1 at 38.49. We then quickly went down below S2 at 38.19. As the day went on, we fell down to S3, which usually is not calculated. I drew that on the chart that I'll show you. This was at 37.69, and this is where we found support. Then prices were able to rebound from S3 up to S2, and that's a pretty significant move. And we'll have to see if there's any carry through that will happen. We closed just slightly above S2. We were down 1.45%, so we pretty much gave back what was gained in Wednesday's session. We gave it back in Thursday's session. Volume is below average. It did pick up a little bit, but it's still below average. So our technicals are still negative. We're becoming more oversold or extreme negative in the short term, but we're not really seeing much of anything in the intermediate term, at least yet. The big fixation is interest rates and inflation and growth concerns, not only within companies, not only what we're experiencing personally, but within the market as a whole. And we're projecting that globally as well. So we're really having some obstacles to overcome right now, and that's why the market continues to be more negative. So here is the intraday chart where we gapped down below S1. We quickly went down to S2, broke below that, and went all the way down. This should be S3, not R3. That's a typo on my part. But we established a pretty decent base right here, and then we shot up off of that. So we were down about 2.9% at the low, and we ended up being down 1.4, little over 1.4%. So we gained about half of that back, and that's pretty positive. We want to see now, can we get some follow through to the upside in Friday's session? So what are some comments that we can make? We were down as much as 2.9% with the S&P, and we dropped below 3,800, but we rebounded. We were able to regain the 3,800 level and regain a lot of what was lost earlier in the session. So we asked this question: can the midday rebound be seen as positive? Will this start the rally that everybody has been hoping for? Part of the negative backdrop were earnings reports, and Micron and CarMax came out, and they were not well received by the market. So that really added to the negative tone. We also had a person named David Tepper, who's a very influential hedge fund manager. He gave an interview and said that he's short overall, so he's expecting the market to go down, and he expects the Fed and other central banks around the world to keep tightening and for rates to remain high for a long time. Now, this is something that we've kind of already known, but to have somebody come on that this guy made the bottom call back in 2009, in March of 2009, and because of that, people think, oh, he knows what's going on. He's a rock star. If he's talking now, we better pay attention to him. So when he came out and said this, that added more to the negative backdrop, because he also went on to say that it'll be difficult for things to go up. So when you hear that and you have a lot of people listening to what he says, that is really going to have an impact. Another thing is the VIX is really acting strange. It went up a little bit with the decline, but not really high. And then it ended up coming back down as the rebound was happening. There's still these concerns that are out there for the earnings per share on individual companies and the market as a whole, and the valuation of the market. Maybe it's considered to be too expensive right now, and that prices need to come down to be more fairly valued. The dollar was up slightly, and interest rates were kind of mixed. Some of the maturities were up and some were down on the day. On a short-term basis, our PMO studies, we have some things that are looking extreme negative. Our stochastics and the PMO studies and the stochastics, we've been showing those for the last few days. Even with things rebounding, they were still not really suggesting that we're working off that situation. But the new ones on here are the Stoch RSI and the Williams percent R. These are pretty touchy. And even though we gained back a lot of what was lost, these indicators are still pretty extreme negative. We only have the CCI 14 and now the 20 that is extreme negative in the intermediate term. Nothing else is really showing up yet. We have our yield curves that remain inverted. That hasn't changed, and we're still in this fear area, so we're kind of going with that. It's not extreme. We did fall, but we haven't drifted over into the extreme negative area, at least yet. The reports that came out, we had the estimate for third quarter GDP. It was a little better than what they had expected. The last time we got this, it was at 2.9%. It came out at 3.2%. So that was an improvement, and that was seen as more positive. The deflator came in at 4.4%, a little bit more than the 4.3 that they had expected, which is what we had last time. Weekly jobless claims were at 216,000, a little bit less than the 225,000 that were expected. And the leading economic index, this was not taken as very positive. It came down 1%. They expected it to be down 0.4%. The last time we had this, it was down 0.9%. So that was weaker than expected, and showing, looking forward, that the economy is not looking all that good. Our trend is still negative, and it is weakening because we're bouncing all around right now. So it's really hard for the ADX to turn. It's trying to right now. It's picking up the more negative side of things because the red line is on top, but we're still well below 20 and we're below the moving average. The bias continues to be negative, and I've switched our momentum back over to negative as well, even with the rebound. Now, that could change if we see some follow through in Friday's session, but right now it's more of a negative stance. Here is the model that I look at in every video and will be until this either plays out in its entirety or we break and go against this model. But this is just suggesting, if you compare it to 2006 to 2008, that we could see this weakness that we're seeing now could continue going forward from here, at least into the end of the year, possibly into the beginning of next year. The VIX, which really hasn't been participating in this downturn, we're still in the low 20s right now. But if we do really start to fall, we will see a real pickup in the VIX, but it just hasn't happened yet. Here is the VIX. It's just acting kind of weird now, where it's been not really going up as we've been falling, but when you take a ratio between the VIX and the S&P, it's really starting to spike up. And if we get really high with this reading, a lot of times that will mark some kind of a top in the S&P 500. We'll have to see if this continues. There's other times when this started to spike up, and I made mention of this in the videos, only to have it come back down. We still will probably go a little higher with this. We want to see real extreme readings before we really try to read into what is happening with this. The ulcer index, which also attempts to measure fear, it actually dropped a little bit. It liked that rebound that we saw in Thursday's session. So it's been coming back down, and the moving average is more midpoint as far as sentiment is concerned, or the fear that we're measuring. The equity put call ratio that really spiked up in Wednesday's session, it came down even with the down day. But this was such a high reading, it's probably not surprising that we ended up declining. And then here's the 5 period. moving average, where it's still spiking up. It's picking up that real spike from Wednesday's session, and we're just blowing all the other spikes completely out of the water. And just to give you some historical perspective, where we're really spiking up here, these were considered pretty monster spikes when they happened, but this is like a triple monster spike up here. So we'll have to see if that is able to mark some kind of a low in the S&P 500. Here's our trend where we're trying to turn up a little bit, but we're still below the moving average. The red line's on top and advancing. The green line's on bottom and decreasing. So we default to the negative trend. The BPI, which didn't really, it was down, but it didn't really go down real wholeheartedly as the S&P was going down. So it held up a little better, but it's still negative overall. And we're working off of these spikes that we're seeing here. And I kind of tried to point this out as a potential head and shoulders top, where here's the shoulder, here's the head, and here's the right shoulder. And now we're falling down. We'll want to see. Other times when we spiked and came down, we didn't really have 3 spikes right here. It was a little more violent to the upside before we turned and started to go down. So we'll want to see if this continues to fall, is the S&P going to fall as well? On the extreme side, where our PMOs that are rising, it was trying to work off that short-term oversold condition, but now it's dropped back down. We're still extreme negative with the buy signals that are being generated, and we're continuing to decline with the PMOs that are above zero. So that's negative overall. Here's the stochastic short-term starting to get a little extreme with the down day, still showing some improvement in the intermediate term, but extreme negative, and we're still declining in the long term. And again, as I point out here, this chart is just subdividing the short term. So we have short, intermediate, and long term inside of the short term time frame. Here's our double and triple exponential moving averages. We're trying to come back up to this anchored moving average, which marks the COVID low. And that might be providing, it was trying to give us some support, but now as we come back up, it might be providing some resistance. Here's our daily chart where we really came down. We broke below S1, but we were able to come back up and close pretty much right on S1. So we're still right at fairly significant support. And then down at the bottom, we see where volume did pick up, but it's still below average. Here's our moving average tree. We're still below all of the moving averages that are plotted here. We have to regain some of these for things to turn back more positive. And new highs, new lows, we saw new lows really start to expand. And so on a 5-period basis, we are declining. We're also declining on the 10-period. Here's our elder impulse, which had switched over to neutral after Wednesday. Well, with the decline on Thursday, we've gone back to the red bar, which is negative. The Ichimoku cloud, or itchy and scratchy cloud, we're trying to hold with support right here. We came down below that, but we closed right at the support level. So that's pretty significant right now. Can this support hold? And will we get some kind of rally out of this? Or are we going to break down below this cloud and keep falling? Here's our short-term fib level, where this double fib, we're pretty much right on top of these 2 lines here at about the 38.22 level. So are we going to bounce up off of that with the rebound that we saw, or are we going to break back down, or are we going to end up going sideways with the market switching into holiday mode? Here's our longer term fib chart where we're hanging in there. This chart is from about 38.26 to 38.30. We're just a little bit below that right now. So this may act as resistance. It's pretty close though, so you might even be able to say, could this act as support? But we're still just a little bit below that currently. Here's the weekly chart where we're right on top of this 38.2% retracement. So this has been holding up. We're still above the 200-week moving average. Can that continue? Are we going to see some kind of a bounce up off of this? And then we're a little bit below the midpoint of the trend channel currently. And the Dow still continues to be above both the 50 and the 200-day moving averages. So this golden cross is hanging in there for being a signal, and we're still above that. And we're right at S1 and a little bit above that right now with the Dow. So so far things are holding up. The Dow is the chart that, at least for the fall, it was the chart that has been looking the best. And so it's been providing some leadership. Can that continue from here? So what's our outlook then for Friday? The technicals are negative, but can that rebound continue? We'll be watching for that. We have durable goods orders coming out on Friday, and personal income and spending, as well as the PCE prices, as well as the core prices. New home sales will be coming out, and then we get the final consumer sentiment survey. The preliminary one came out 2 weeks ago. The final one will be coming out in Friday's session. Then the whole list of geopolitical events. The market is still really fixated on the inflation and interest rates. The earnings, as they come out, they might provide something positive or negative. In Wednesday's session, it was a positive backdrop. In Thursday's session, it was negative. So it's kind of a roll of the dice as to if earnings have an impact, whether that will be positive or negative. So our scenarios, not really going with the downwind yet because we're not trending and we're becoming short-term oversold. So it's really hard to take advantage of this downward movement if you do that sort of thing. Can't go with the up because we're negative. Our charts are still really pointing down, and we're trying to ask this question, can that rebound continue? But our technicals, they're still negative overall. We have to regain those moving averages, the pivot levels. They've been holding up okay, but are we going to be able to hang on to those? And the fib retracements, some are a little bit above, some are a little bit below. So overall, we're kind of right at a lot of those levels. So we, right now anyway, continue to go with the sideways trend because the ADX is still weakening, even though it's trying to turn up. We're below 20 and the red line's on top, so it is negative. So our conclusion, the S&P is negative overall. Short term, it's negative and becoming more oversold. Doesn't mean we have to stop, and more indicators might come flying in to generate more of an oversold condition. Intermediate term, we're just flat out negative. We have those two CCI indicators that are extreme, but most of our other indicators are not really showing that yet. But long term, since we're still below the 200-day simple moving average, that continues to be negative. Thank you. Have a wonderful day on Friday. I will prepare a video after Friday's session. It'll be the last video that I prepare before Christmas. And again, please be reminded that the market will be closed on Monday, but I'll make that statement in Friday's video.